Hello and welcome to Finance News Weekly. I'm your host, and this week, Wall Street delivered one of its biggest surprises of the year. Let's dive in.
This week's top story. The S&P 500 pulled off its biggest intraday reversal since April. On Thursday, the index was up nearly 2%, then flipped to close down 1.56%. The Dow swung from plus 700 points to minus 386. What's going on?
November has been rough. The Nasdaq is down 3.5% this month, on track for its worst showing since March. Nearly $1.74 trillion has evaporated from tech stocks in just 2 weeks. Investors are getting nervous.
But there's a silver lining. Citadel Securities' Scott Rubner sees this as a healthy pullback. He's calling for the S&P to rebound to 7,000, driven by seasonal trends and market positioning into year-end.
Now, a major driver of uncertainty, the Fed. Remember when a December rate cut seemed like a sure thing? Not anymore. The CME FedWatch tool shows just 32% odds of a cut, down from nearly 99% a month ago.
The Fed minutes revealed a divided committee. Inflation is still above the 2% target, where it's been for nearly 5 years. Chair Powell himself said a December cut is far from a foregone conclusion.
Meanwhile, in Europe, the ECB is holding steady at 2% for the third straight meeting. After 8 rate cuts since June 2024, the cutting cycle appears to be over. Markets expect no changes well into 2026.
Now to the biggest earnings story of the week. NVIDIA, the AI chip giant, crushed estimates with $57 billion in revenue, up 62% year over year. CEO Jensen Huang called Blackwell chip sales, quote, off the charts.
But here's the twist. Despite those blowout numbers, NVIDIA stock actually fell 3% by market close. It was up 5% earlier in the day. This perfectly captures the market's current mood. Even great news isn't enough.
Speaking of AI valuations, Microsoft and Amazon both got a rare downgrade this week. Rothschild analysts argue that AI infrastructure costs 6 times more capital than traditional cloud computing. The easy money may be over.
Big tech isn't slowing down, though. Combined capital spending from Google, Meta, Microsoft, and Amazon is expected to exceed $380 billion this year. That's a massive bet on AI paying off.
Meta had its own rough week. Despite beating estimates with $51 billion in revenue, shares dropped 11%, the worst day in 3 years. Why? The company raised its CapEx guidance to up to $72 billion.
Now let's check on the chip sector. TSMC lifted its full-year revenue guidance to mid-30% growth, riding the AI wave. But ASML faces headwinds from China export restrictions. AMD is down nearly 10% this month as cloud giants shift to custom chips.
Quick hits on other tech names. Apple posted a record quarter with $102 billion in revenue. iPhone 17 is selling strong in China, up 37% year over year. Tesla is holding around $404 as robotaxi hype meets China sales challenges.
To the retail sector now. Walmart absolutely crushed it this week. Revenue came in at $179.5 billion, and the stock jumped 6.5%. E-commerce is up 27%. Plus, they're moving their listing to the Nasdaq on December 9th.
Target tells a different story. Third quarter profit tumbled as inflation-pressed shoppers stay away. They've cut holiday guidance and plan a 25% boost in store investments. New CEO takes over in February.
Time for our crypto update. Bitcoin is officially in bear market territory, down 26% from its October high of $126,000. It briefly fell below $87,000 this week. ETF outflows have hit $2.3 billion.
Not everyone is panicking, though. MicroStrategy, now called Strategy Inc., bought another 8,178 Bitcoin for $835 million. And Harvard University tripled its Bitcoin ETF holdings to $443 million. Institutions are still accumulating.
Commodities corner. Oil is at multi-year lows. WTI crude fell to $57.77 a barrel, down nearly 19% year over year. Global inventories are at the highest since 2021. The World Bank expects commodity prices to hit a 6-year low in 2026.
Gold tells the opposite story. Prices are holding near $4,000 an ounce, up almost 49% year over year. Some analysts see $5,000 by late 2026. When stocks get volatile, gold tends to shine.
Global markets check. Japan's Nikkei saw wild swings this week, down 2.3% on Friday after gaining 2.65% Thursday. The yen is near 155 per dollar, sparking intervention fears, and Japan's 10-year bond yield hit 1.8%, the highest since 2008.
China's Shanghai Composite is up 16% year over year, driven by tech stocks. Valuations remain attractive at 11 times earnings, a 47% discount to US equities. Southbound investment flows have hit $78 billion year to date.
Defense sector spotlight. Boeing reported its first positive free cash flow since late 2023. Revenue jumped 30% to $23.3 billion. The defense backlog hit a record $76 billion. Analysts are bullish, with average targets 30% above current prices.
Regulatory news. The EU has named Amazon, Google, and Microsoft as critical service providers under new financial sector rules. This means direct oversight from EU watchdogs. More compliance costs could be on the way.
So, what's the takeaway this week? Markets are in a fragile state. The Fed is uncertain, AI valuations are being questioned, and even great earnings can't lift stocks. But for patient investors, pullbacks create opportunities. Next week, watch for the FOMC meeting minutes follow-up, Black Friday retail data, and more earnings from the tech sector. Keep your eyes on the volatility index. It's telling us risk is still elevated. That's all for this week's Finance News Weekly. If you found this helpful, please subscribe and hit that notification bell. We'll see you next week with more market insights. Stay informed, stay invested.